First, let's talk about the recent downturn in the semiconductor industry. The Philadelphia SE Semiconductor Index has ended its stunning rally, confirming it has entered a bear market, down over 20% from its late June record high. This comes after a year of significant gains, with some chip stocks soaring over 160%. The question on everyone's mind is, has the trade run too far? We'll explore this further and what it might mean for investors. In other news, we're in the midst of second quarter earnings season, and all eyes are on the Magnificent Seven stocks, including Alphabet, which reports its quarterly earnings this week. As one of the heavyweight stocks driving U.S. equities higher, any announcements from Alphabet, especially regarding AI spending, could have ripple effects across the entire tech ecosystem. With expectations for profit strength this year providing support for investors' enthusiasm, we'll examine how these earnings reports might impact the market. It's also worth noting that the Federal Reserve's meeting at the end of July is looming, with pricing in Fed funds futures indicating expectations of a potential interest rate hike to combat inflation above the Fed's 2% annual target. However, cooler-than-expected data on U.S. consumer and producer prices has calmed some fears, painting a picture of a steady economy with improving inflationary pressure. As we navigate these complex financial landscapes, it's crucial to stay grounded in the fundamentals. The earnings season will undoubtedly bring its share of surprises, both positive and negative. Our goal at the Riskwiser Zone is to provide you with balanced insights, helping you make informed decisions in your investment journey. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're exploring the latest developments that can impact your financial well-being and risk management strategies. The program in question offers a $1,000 gift to every baby born between 2025 and 2028. Which can be invested in a special account. This account is designed to be accessible to all American children, with the goal of fostering a culture of savings and investment from a young age. On one hand, this initiative has the potential to make a significant difference in the lives of many families, particularly those who may not have the means to invest in their children's future. The $1,000 seed money can grow over time, providing a valuable financial safety net for when the child reaches adulthood. Moreover, the program's emphasis on investment education can help bridge the knowledge gap that often prevents people from making informed financial decisions. On the other hand, there are some concerns regarding the implementation of this program. For instance, it's unclear how these accounts will be treated on the free application for federal student aid, which could potentially impact a child's eligibility for need-based financial aid. Additionally, there are questions about the tax implications of these accounts, as some states may tax the growth on investments. Furthermore, the fact that wealthy families may be able to contribute more to these accounts over time could exacerbate existing income inequalities. It's also worth noting that the program's reliance on a mobile app for account management and contributions has raised some privacy concerns. While the app may provide a convenient and user-friendly experience, it's essential to ensure that sensitive financial information is protected and secure. In conclusion, the new child investment accounts represent a well-intentioned effort to promote financial literacy and provide support to families. However, as with any complex program, there are potential risks and challenges that need to be carefully considered. As we navigate the intricacies of this initiative, it's crucial to prioritize transparency, accountability, and fairness. Welcome back to the Riskwiser Zone. As we wrap up today's show, I'd like to shift our focus to the world of corporate earnings and upgrades. We've got a couple of interesting stories to share with you, so let's dive right in. First off, Bank of America has been making headlines with its impressive earnings report. The bank's stock jumped 1.9% after it announced a significant beat on both revenue and profit expectations. But what really caught my attention was the company's operating leverage guide, which is now expected to be even higher than previously thought. This is a testament to the bank's efforts to streamline its operations and improve efficiency. However, as we all know, past performance is not necessarily indicative of future results. The big question on everyone's mind is whether Bank of America can sustain this level of earnings power throughout the year. The company's executives acknowledge that they're up against tougher comparisons in the second half, which could lead to a moderation in growth rates. Meanwhile, another company that's been benefiting from positive news is Cintas Corporation. The uniform and facilities services provider was upgraded by Bank of America to a buy rating, with a price objective of $230. This upgrade comes on the heels of Cintas's better-than-expected fourth-quarter fiscal 2026 results and fiscal 2027 guidance. According to Bank of America, Cintas is poised to deliver high single-digit revenue growth alongside stronger margins, driven by improving labor market conditions, technology investments, and margin expansion initiatives. The company's proposed acquisition of UniFirst is also seen as a potential catalyst, with estimated synergies of $375 million. Now, I know some of you might be thinking, this all sounds great, but what about the valuation? Well, Bank of America has raised its valuation multiple to 39 times earnings, reflecting greater confidence in potential earnings upside. While this represents a premium to business services peers, the firm believes it's supported by Cintas's consistent high single-digit growth profile and technology-driven productivity improvements. As we close out today's show, I want to remind our listeners that investing is all about making informed decisions based on your individual financial goals and risk tolerance. While these stories might be exciting, it's essential to approach them with a critical eye and consider multiple perspectives. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.